Hello, welcome to the Capital Employed podcast. Before we jump into this episode, please make sure to add your email to the Capital Employed email list. We will be publishing some exclusive interviews that will be only available to those on the list. To receive these bonus episodes, please visit capitalemployed.fm/exclusive and add your email to the list. In this episode, I was pleased to have on as a guest Keld van Schreven, who is the co-founder and managing director of KR1 Plc. If you are an investor in blockchain and decentralised finance, or are completely new to this space, I think you'll really enjoy this episode. While Bitcoin and the price of Bitcoin steals all the headlines, there is actually something far bigger happening in the undergrowth. A whole new financial system is being built. There is a huge wave of disruption on its way, from how shares in companies are issued and traded, to decentralised insurance and so much more. If you're new to this space, there can be a lot of jargon and terminology, but please don't let that put you off. I really enjoyed this conversation and I'm sure you will too. Please enjoy my conversation with Keld. Hi Keld, thanks for coming on to the show. We did do this recording last week, but for technical reasons it couldn't upload, so I do appreciate you coming back onto the podcast.
That's all right. Good to be on.
For listeners who may not be familiar, can you add some colour to KR1? Who and what is KR1?
KR1, we like to think ourselves as Europe's leading digital asset investment company supporting early stage blockchain projects. We were one of the first institutional investors in the space, founded in 2016. And we've really been kind of like a first mover investing in key projects in this whole area of decentralization, blockchain, which enables really innovative new types of economic activity that's getting a lot of interest at the moment. Yeah, so we've probably invested up to 55, maybe more. So that's seed investments in 4 years, which is a hell of a clip. So yeah, we're a capital allocator. We're a permanent capital. We're not like other private crypto funds, so we don't have redemptions. So we are a public company, so anyone can own a share, which is really nice and inclusive for everyone. And also you can put it into your ISA up to 20k. So some additional interest there for the armchair investor. So we really are there for anyone who's interested in investing in this space to get access to a very unique portfolio of lots of amazing digital assets that is kind of unrivaled, I'd say, in the space. I mean, there's probably a couple other funds that have it, but we're certainly one of the few ones to have such unique assets. We also have significant staking revenue, which is really exciting to the business. So overall, our thesis is that blockchains will create an unparalleled wealth opportunity over the next 10, 15 years. Decentralized networks will create new types of economic innovation that will really create trillions in value. And that's kind of what we're investing in.
Kudos for you to being a listed company as well, because I don't think it's easy for a lot of people to get access to a lot of the early stage projects that you have access to.
Yeah.
I was going to ask, was it quite straightforward to list on that Aquis exchange, just out of interest?
No, yes and no. It's a whole different type of activity you have to go through, and it's not for the faint-hearted. Like anything, there are positives and minuses about it. But we do love the fact that anyone can invest in us. I mean, that makes us very different from any other type of crypto fund. And also, what we've seen recently is a lot of our investors have been getting very active in the projects that we invest in. So that's really kind of even more inclusive. So once you become a KR1 shareholder, you can almost join the journey, because you kind of own a small proportion of the project that we invest in, obviously, and that gets them more interested. So we've seen a lot of that happening. So we probably have a few hundred investors that are actually getting involved in the projects that we actually invest in. So that's really nice to see.
And when you invest in these projects, when you get invited to take part, how long do you aim to hold on for? Does it until it reaches a certain market cap and then you would take some money out, or do you just hold for the long term?
Yeah, that's a good question. Again, because we don't have redemption, so we don't have to sell down assets. So there's none of our investors saying, "Hey, I need to sell my share of KR1," so we have to then sell down assets. So we're in a unique position where we're like a pure long investor kind of mentality. So we allocate the capital. At some point, we pick out a exit for the initial stake that we have in, and that can be years. Initially, when we started, it was months because we were in a sort of crazy, very quick cycle of recycling the profits. I mean, that's kind of got where we got our name and success from early on. But yeah, we will wait for a moment. The kind of multiple is not set, but it's when the project is slightly mature and we're comfortable with taking a small slice out. On something like a proof of stake network, this kind of differs in a way because we're actually generating a yield in the native token itself, and we do sell that down. So that's kind of like a different form of sell down that we are doing. But yeah, I mean, sort of that's a long-winded way of saying we really pick the moment, but we're very long on it. We're in that position because we don't have any sell pressure internally on the portfolio from our investors.
And you were early investors in Ethereum and Polkadot. Ethereum is obviously the big name. Do you I kind of see more and more projects kind of being built on other blockchains like Polkadot. One of the projects I keep an eye on is Polymath, and I think they originally started building their project on Ethereum, but they needed something a bit more bespoke instead of the Ethereum kind of one size fits all.
Yes.
Now they're sort of building their own thing, I think, using Substrate. I was just going to ask, do you think Ethereum's of that size? It's got so many developers that it's kind of built itself a bit of a moat, or could you see Ethereum's kind of slipping back a bit and something like Polkadot kind of catching up? Is the technology of Polkadot a bit better?
Yeah, I think when Polkadot started, it was genuinely a competitor to ETH. That's because the founder, Gav Wood, was co-founder of Ethereum, coded the first version, got very frustrated with what he saw and said, right, I can improve on this. But I think, the Polkadot ecosystem is about interoperating with other blockchains. It's like Ethereum's like America, and the Polkadot protocol is a kind of a way of connecting the countries together. So nation states will start trading amongst each other rather than just themselves. And as we saw in our own history, that once countries started trading because of shipping amongst each other, that economic activity exploded. And we'll see that with the Polkadots, the Cosmoses of this world, who are about this interoperation between these big nation states, as it were. But Ethereum is sort of the America of the blockchain space. It's got thousands of projects on it. With Polkadot, they've got hundreds. But we are seeing some sort of migration onto it because imagine, analogies. Ethereum's like a one radio station type of operation. With Polkadot, everyone can have their own radio station. They can have their own chain running on it, doing their own things. It's just more flexible. You've got kind of less issues about cost of transactions, speed of transactions. You've got flexibility of changing things on chain as you go. With Ethereum, you have to fork the actual chain itself. So it's just like when we use Polkadot, it's like getting into an electric car versus going into a petrol car. It's got that feeling of the future about it. It does feel like that. But they will interoperate between themselves. And we had this big debate before. Who's going to be the winner? Is it Ethereum? Is it Polkadot? Is it Cosmos? Is it Definity that's coming? And the reality is there's space for all of them. And I think that's what we'll see in the future. There'll be chains that are much more suited to things like supply chain management, DeFi, gambling, content deployment, distribution, with things like Kasama, things that just need less security on them. So I think we'll find chains that actually find their niche and find their customer, which is the developer who needs to build the applications, which will ultimately drive the users onto it. So we've got expanding universes of Ethereum, Cosmos, Polkadot, Definity. These are just growing out. Some will suck out the sort of oxygen of the other sort of slowly. How that plays out over time, that's to be determined.
I like the analogy of the trading nations as well.
Yeah. Well, I mean, historical analogies are very useful for these things because history rhymes, it doesn't repeat. But and absolutely, we're going to see this type of thing happening.
It's an amazing space. I read a lot of like financial history books, and the Soviet Union, the kind of the fall of the Soviet Union is but a part of history that really interests me. And
Right.
even though the Berlin Wall fell down in 1989,
Yes.
if you speak to people that lived in the Soviet Union, they will tell you it was cracking in the early 80s, even before then.
Right. Yeah.
I kind of feel it's the same with current kind of financial system. It's a system that was
Yes.
built in the 20th century by central bankers, commercial bankers, and governments, and it's just not really. It's sort of cracking at the seams a bit now. The infrastructure that's happening in the DeFi space is better. How big could
Yeah.
you, or how fast even could you see this kind of DeFi space developing? Could it get to the point where instead of logging on to like Hargreaves Lansdown and buying shares, we could just do peer-to-peer trading on some exchange?
Yeah, I think the answer is yes. I mean, we're going to see the collapse of certain financial industries, being sucked into this technology. That is going to happen. Basically, any sort of financial intermediation, banking, all these things are going to be vaporized by DeFi, Bitcoin, and new trustless decentralized services. Now, the interesting thing alongside this is that nation states and sort of legacy finance institutions are not going to allow that to happen to a certain degree, and we're going to see, nation states basically taking the technology and redeploying it for their own use. So actually stripping out the censorship resistance of the decentralization part of it, but actually using the blockchain part of it to create national stablecoins, regulated stablecoins, and sort of centralized financial products that ape DeFi that are regulated. And I think, one of the big drivers for this is, the sort of fear of the money supply. There's this meme going around that 35% of all US money has been printed in the last year. What this migration to this technology enables a nation is to add a couple of percent on the GDP. And I think in the UK there was a study done by a financial institution about that. So it can bring really good kind of instant economic upside to the nation, tax collection, redeployment of funds to people very quickly and easily. So, there's lots of compelling reasons for a government to use this technology. How that rubs up against the DeFi degens is going to be an interesting one to watch. Our guess is that the two will play out over time, and the degens will find a very happy home in the jurisdictions that are welcoming to them, and in sort of like the G7, the G20s, there will be sort of slightly heavier regulation. I mean, you'll still be able to hold and trade and invest in crypto, obviously, but from a national point of view, they'll have their own products and services that will be allowed to develop, and that'll be another parallel innovation curve that we'll see probably.
Be interesting to see the role London kind of chooses to play in all this. Post Brexit, looking for like a new role in fintech and the blockchain technologies.
Absolutely. Well, we've always been, secretly very, very receptive to these waves. I think London is a very, very welcoming place to entrepreneurs to use this type of technology. If you look at the last Web2 movement, that got good traction in London. Fintech is a kind of an industry now there. So I think certainly Rishi Sunak is pro technology, pro innovation, pro entrepreneurship. We saw that with what the kind of they're thinking about in the researching for the national stable coins. The FCA have been very light on crypto assets. They outlawed leverage trading, which is a good thing. They're basically slowly cleaning up the space to fold themselves in somehow into it.
Yeah, that's good to hear. So can you talk us through one or two projects that you've recently invested in that you're really optimistic about for the future? What problems are they solving?
Yeah, that's a good question. So out of the 55 projects, I'd say, the interesting ones are Nexus Mutual, the decentralized mutual, which is like a reboot of the old mutual. Which what we loved about this is that the mutual used to be a collection of individuals in a locality who would club together in a community to create an insurance pool. It could be a village in the old days, in the medieval times, and they would, if anyone had an issue and a claim, there would be a committee, and they would decide if it was a valid claim or not. That actually worked really well, and you've still got mutuals around today in the UK. What Hugh Karp, the founder, did very cleverly was kind of use that approach and put it on chain where it could actually scale it out. So the committee would be people who had voting rights, who had the tokens, and people could put money into the pool, and then they could work out where they could deploy the pool, and people would put proposals in for projects to have a kind of a premium on. And so that's kind of like a very neat application of old world scaling issue on chain. And we really like that. And we really like Hugh. If we like the founder, then we'll get excited about their vision of this trustless innovation they're trying to do, then we'll kind of support them on it. And he was very unique because he was ex-financial director of Munich Re, which is quite a big reinsurer. And they had their own labs operation, and that he was, he got this. He was one of the early thinkers in sort of applying the technology to an industry, and that just got us really excited. We seed funded that. We kind of led the round on that. We got some investors together. We actually put the first capital into the pool to kickstart it. There was a very tricky period where it was touch and go about the project, but we all came through it, and then it just suddenly sparked off, and bang, it became a bit of a poster child success for Ethereum. So we're very excited about what Hugh's achieved there. Another project probably have to go to Polkadot, just because it's such a groundbreaking project. It's not like Ethereum because it doesn't have the smart contract capability on it. It's more like an operating system, and the smart contract part of it is like a software application on top of it. So you might get it's like Polkadot, it's like the Mac, and the smart contract is kind of like a quasi operating system on the Mac. So it's a logic that you can run all these types of environments. So it's like a bit of a low level environment, which is kind of, you have to get your head around that. But what it does, it gives you flexibility to put your own chains in that environment. So the power chains that they're called, there's going to be lots launching soon. We just love that pre-Cambian explosion, as it were, of life that's going to happen in this Polkadot ecosystem. It's going to be absolutely fascinating to watch. I think there's going to be lots of really interesting new types of services and applications that we haven't even seen of as yet. And they will interoperate with Ethereum. There's going to be lots of interesting international cooperation, as it were, in that chain. And I think we're seeing the genesis of a truly compelling sort of economic system that could potentially rival Ethereum as it moves forward.
Yeah, there's some absolutely fascinating projects here, and a lot of smart people in this space as well.
Yeah, we just announced actually Lazy Ledger. That's a stripped down blockchain type foundational layer again for making the data kind of more available and sort of being able to always make sure it's there and you can actually verify it. And so we're still in this kind of infrastructure kind of phase. We're just coming out of that in a way, but we're seeing more tooling and sort of innovation around that. So yeah, there's plenty to come down the pipe for sure.
I don't know if you ever go on that DeFiPulse.com website. I love to look on there, and at the moment it sort of says the total value in the DeFi space is just over 37 billion. When you think of the size of the markets that these projects are trying to disrupt, it's only in the foothills, really. We're talking about trillion dollar industries and markets.
Absolutely. Yeah. We're still early. I mean, we're not, if anyone's listening to this and they're sort of like, I haven't, got any skin in the game, or I haven't got I'm just starting to learn about it. I mean, that you're not early, but you're not late either. So you're kind of, it's okay. You've still got time to read and get involved in all of this. So yeah, it's start of the kind of the shaking up of these industries is going to start happening.
it's a good time to get involved. I've got my own sort of little blockchain and DeFi application kind of portfolio I've built, and so far this year it's up 60%. Right. Yet my stock portfolio is up about 2%.
Okay, so that just shows you what there's more. You've got genuine fluidity of. There's no economic friction in these kind of investments, as it were. There was a big criticism in the last sort of hype and crash about it's almost like projects are IPOing before they're ready. Well, now they're IPOing over time, as it were. There's we have vesting schedules, and we have projects have to release actual main nets, otherwise there's regulatory issues. So you've got real opportunities for investors to take risk and get reward. We're seeing that in this sort of slightly experimental aspect of this. So when you're up 60% in this sort of asset class and only up a couple of percent in the other, it's because of this fluidity, experimentation. And genuinely, if you look at equities, they're quite locked. Equity investors are very, very hand-tied, on their activities. So it's just it's a freer arena. It doesn't mean that sort of, there's anything untoward going on. It's just the internet is a fluid network. These are fluid assets and fluid services. Old legacy systems are not fluid on this network, and therefore, they will not fit into this new world we're in. We're all walking around on our phones and at home and on our laptops. We're in this new society that's online. We're not in this we're kind of slightly leaving the old world behind. The friction we're seeing is the old world trying to join this network, as it were. And these new crypto networks are just extensions of the current network, which is the internet, which is creaking, under pressure, insecure, unable to provide the sort of innovation on top of it anymore. And these crypto networks have got the new innovation on it. They've got the fluidity. They've got everything about them, and they're going to replace the current creaking internet. So we're going to see that more and more over the next few years.
It's a fascinating space. Thanks so much, Keld, for coming on to the podcast. We're kind of coming up to time now. So if people want to find out more about KR1, where can they go to?
KR1.io is our website. They can follow us on Twitter, which is KR1 Plc. That's at KR1 Plc, and they can message us via the website or on the Twitter feed. And they can follow us there.
Okay, brilliant. Thanks for your time, Keld.
Okay, thanks, John.